Okay. I do not have my chat box open, so if you have any questions, please take yourself off mute and talk to me. So good morning, everyone. Happy Valentine's Day. This is Michelle Ponce-Baxa, your mortgage professional here at Cross Country Mortgage. Thank you all for joining. We will be talking about renovation financing and how to help your buyers fall in love with their new place. Renovation financing is a specialty product that I've been doing for several years now. And not everyone fully understands how it works. So I figured it would be great to just go through this process and give you an overview of what the product can do for you. So on today's agenda, we're gonna talk over, why renovation financing, what are the benefits of it, the cross-country mortgage advantage, the suite of our renovation products, and then we'll definitely go over what renovations look like, timeline, and next steps. But while we go through this presentation, please do feel free to ask questions along the way, because I definitely want to make sure that we are addressing any of your questions or concerns regarding the products. All right, so why renovation financing? So generally speaking, being able to offer renovation financing is going to obviously open up more inventory for buyers, because it's going to be able to finance the property in its current condition. So it doesn't matter if the property is livable or not, we're able to use a renovation loan to close on a real estate transaction. So if you have buyers who are picky, then this might be a great product for them, because they don't have to pay top dollar for someone else's renovation, right? They can go ahead and buy a property that has the benefits that they're looking for. Maybe it's in the right location for their kids' school district. It's the perfect size. Maybe it just needs to be updated, right? So this renovation product can help your buyers turn a house into their perfect dream home. So of course, with the benefits of that, there's also the benefit of building equity and wealth, which we all know, which is why we're in real estate. So I think that the biggest one here is really the inventory, because what I find is that, especially now in the limited inventory market that we're having, there's a bidding war on every other property. So if your clients are able to find something that maybe just is outdated, or again, it's the perfect size, but maybe the basement isn't finished and they need an extra bedroom, they can use a renovation product to build their home. So the cross-country advantage, we have common sense overlays. So unlike other lenders, our requirements do work with your borrowers. There's not additional restrictions to get financing. Generally, we're looking at the same guidelines that are in place currently for both the conventional FHA and VA. And then there are some additional overlays, but nothing extensive. And when we go through the pre-approval process, we're making sure that the buyers are qualifying with those additional overlays. Now, on my team, I do have a renovation specialist who exclusively works on these loans. So it's a dedicated processor that works on this, dedicated underwriting team. There is no other types of financing that these individuals work on. So every day they are touching renovation files, which is going to then make the process easier and streamlined for our buyers. And then we also take care of the draws post-closing. So we have our own in-house post-closing draw department. And so if there's anything that comes up post-closing, because we are handling that part of the process, I'm in the loop. So if anyone has to make any changes, they have questions, and they want to speak to me and have me speak to someone on the draw team, that can happen. Whereas some lenders do not do the Okay. So here are the products that we have. So we have the FHA 203K, both the standard and limited. We do USDA financing as well, although that's not in our market area. VA renovation is also an option under the limited program. We do the Fannie Mae home style, which can be combined with Ready, and we do the Freddie Mac option, which is called Freddie Choice, and this can be combined with Home Possible. So let's talk a little bit about the standard and limited. So a limited renovation loan is going to be up to $35,000 total in escrow, repair escrow. So really it's about $30,000 for strictly repairs, plus the cost that's involved to manage that escrow. So like on this VA renovation, we can do cosmetic work up to $30,000. If anything is structural, then we would not be able to do it under the VA, but it would work under the FHA or under the conventional products, which are Fannie Mae home style and Freddie Choice.
Michelle, 1 second. We can't see your PowerPoint anymore. I think the internet went down, so you might have to reshare.
Oh, okay. So
Perfect, thank you.
so put this down. So here's the matrices that gives us the different down payment options, minimum FICO score, and then occupancy, property type, etc. So there's a lot of information listed on here. But generally speaking, as mentioned earlier, the product goes along with whatever the guidelines are for the program. So for example, FHA allows 3.5% down. So that's the minimum down payment for the renovation loan. Now that down payment is going to be based on the purchase price plus the cost of renovation. So let's say the purchase price is $80,000 and the renovation is $20,000. Now our acquisition cost is $100,000, and that's where the down payment comes in. So the down payment would be 3.5% of $100,000. So it'd be $3,500. For the renovation product, minimum FICO score for FHA renovation financing is 620, as opposed to just regular FHA, which would be a 580 minimum. And then FHA allows us to purchase and rehab properties from condos, single family, townhome, to 2, 3, and 4 unit buildings. Now, in regards to renovation budget, there is no cap on how much you can finance. As long as the numbers make sense, we're within the conforming loan limits for the product, then we can finance the whole project. I'm going to skip USDA and go down to the VA. So VA financing does allow no money down. So there's 0% down payment required. So it's the same as renovation financing for VA. Remember, this is going to be now limited to cosmetic work, so no structural work. Minimum FICO 620. We can do the VA renovation on 1 to 4 unit properties. Home style and choice are the two conventional products. And so we can use these renovation products with owner-occupied transactions, second homes, and also for investors. The difference here is that the budget for the renovation will have a limitation. So the cost for repairs cannot exceed 75% of the after improved value. So that's going to be our cap. One really neat thing about the Freddie Choice program is that we can combine it with Home Possible, and Home Possible allows for 5% down on a 2 to 4 unit building. So a conventional buyer can put 5% down on a 2 to 4 unit building and finance renovations. So that's a really neat product. Any questions?
Who determines how much the renovation costs? Like, is that something the buyer should be getting quotes on, or how does that work?
So they will be getting quotes themselves. They will work with a contractor of their choice, and the contractor will put together an itemized bid that includes labor and material. We in turn will take that information to order the appraisal. So then the appraiser will make sure that the cost estimates provided by their contractor plus the purchase price will be supported by the after improved value.
Okay, awesome. And does the buyer have the choice to do the renovations themselves?
So if the buyer, so we have some overlays on this. So in order for a buyer to do renovations on their own, which is allowed through FHA, they have to be licensed. They have to be a licensed contractor and have been in business for this. We do have overlays that do have restrictions on having contractors do their own work. So, and I'll double check if we can do it on the conventional, because I can't remember offhand if we can do it for the conventional. So I'll follow up on that. But the FHA, I know we cannot. So typically, unless this is their line of business, they cannot do the work themselves. And then the way it works with the draws is that the check will be written out to the buyer and their contractor post-closing. So whenever the renovations do begin, the buyer will sign over the check to their contractor to have the work completed, because it does require 2 endorsements to cash those draws.
Oh, thank you. That's awesome.
So I'm just writing a note that I'll get back to you on the conventional if a contractor can do it on their own. And so I'll tell you this, it gets tricky with cost estimates because buyers themselves have no idea what cost estimates may be, and I find that usually they are underestimating by about 50%. So it's usually double than what they anticipate the cost to be, and especially now with costs of material and labor just going up. So it's really important that from your standpoint as the agents, you're looking at updated homes with the final number of bedrooms, updated, whatever it is that they're renovating. If they're updating the bathrooms, the kitchen, adding an extra bedroom, that you're looking at properties that are already in this condition and have an idea of what the market looks like. Because if we're over improving, then the transaction's not going anywhere. We're gonna have to go back to the drawing board to try to redo the renovations, which may or may not please the buyer and they may not proceed. So that's one of the key items up front that we need help with from your end, is knowing what the estimated value may be to be sure that this is feasible before the buyer starts spending money on an appraisal and inspections and all that. Now the inspection we know that they're going to need to do, but the appraisal we can save money on if we realize that the numbers don't make sense and don't meet market value. Any other questions? We're just sliding right through this. Okay, so here's the timeline. So overall, we can expect a renovation loan to take about 2 months. That's pretty standard because we do have an additional party involved, which is the contractor, and the contractor may take 1 to 2 weeks or 3 weeks to get us paperwork. I've seen it. They can be very delayed, and there's just really high demand right now, especially for contractors. So if they do not have someone dedicated in the office to help out with the administrative work, it does take some time to get quotes. And then we usually do recommend that buyers get at least 2, preferably 3 different estimates, just to have an idea of cost ranges between different contractors. So again, that adds in, let's say 2 to 3 weeks on a typical 4-week process. So that's why we're really thinking about 2 months for these transactions to close. Once we have the contractor's estimate is when we can actually order the appraisal. And then the appraisal turn times are a little bit longer because there's a little bit more work that the appraiser has to do, because they do have to consider the updates that are being completed and then find comparables first in its current condition, but then also in the after improved condition to come up with that after improved value, because they're guesstimating on this value also before the work's actually being done, right? So we'll go through the phases listed herein. So in weeks 1 to 3, we're starting the application. So we're going to collect income docs, bank statements, review credit, everything that we need for underwriting, and go through that process. Your inspection is going to take place as normal, and then that's when the buyers will then start to work on collecting bids from their contractors. When we have that bid, again, we're going to then be able to order the appraisal, and then we're also going to validate the contractor. So the contractor validation means that we're going to go through and make sure that the paperwork, so there's a stack of documents that they have to complete. So we're making sure that the license is not expired, that the contractor has insurance. We're calling on their references to make sure they also have experience with the size of the project. So if they're doing a $50,000 rehab project, we want to make sure they have experience working projects of this size. And then if there's any negative feedback that we're receiving from any of the references, we'll share that, which you would expect that that's not going to happen, right? Because they're providing us their references. But we also check to see if there's complaints listed online, or if there's been any legal issues with the contractors. And all this information is then shared with the buyer in the event that there are some negative findings. We at the end do not choose the contractor, so it is going to be up to the buyer, but we do have to make sure that they have the experience, they can support financing the project, because the draws that happen, it's not all, the money's not paid all up front. It's going to be paid anywhere from 1 to 6 draws, depending on the size of the renovation. So let's say that $50,000 example, let's say that the contractor needs to, we're going to do maybe 3 draws. So they'll get some money up front for the materials, but then they have to also pay for their staff. So they'll have to have enough money to pay for the materials up front, pay for staff during the renovations, and then they'll get their checks, as work is being completed, because we'll do inspections while the work's being completed. So we do have to be certain, again, that the contractor is able to support this, and they have to share some financial information with us, because we don't want to hire a contractor that doesn't have the money to pay for materials, because then what do we do, right? So that's not a good position for anyone. So we do a very thorough review of the contractor's profile and financials. And then once that's done, we're working on the underwriting conditions as we would normally. We finalize that and the contractor validation, that is, and then we do have to redo like the closing disclosures. So there's always an initial loan estimate when we start an application, and then when we do renovation financing, we revise that loan estimate, because once we know that the contractor's bid is final, we have the appraisal, and there's no further changes being made to the project, we want to redo that loan estimate before we issue that preliminary CD. So we do have timelines, restrictions there, right? Because we cannot issue a revised loan estimate the same day we issue a preliminary disclosure. It has to be a day apart, and then that we cannot close until that CD is signed 4 business days before we close. So these extra timelines, like just the timing for the disclosures, does also add to that 2-month period. Make sense? And I don't see anybody, so I'm hoping it makes sense. So the last phase, of course, is closing, and then the repairs happen after closing. So again, the checks are going to be issued to the buyer and their contractor in phases, depending on the size of the project itself. Any questions? Okay. Well, I think that's all we have for today. if you have any specific questions or scenarios that you want to go over, please, feel free to reach out to me directly. I'm happy to go through scenarios and, answer any further questions that may come to mind today, tomorrow, any day. So please let me know what other questions you have. I'll stay on for a few minutes if anyone else wants to chat after, but that is our presentation for today. I hope you guys found something new out of this and that it was helpful.
Michelle, have a great day, everyone.
You too.
Thank you.
You're welcome.
Thank you so much, Michelle.
Oh, you're welcome.
Happy Valentine's Day, Michelle. Thank you.
Happy Valentine's Day.
Thank you, Michelle.
Thank you.